Hey everyone, welcome back to another market closing live stream. So we are back in the wildness of the stock market. Now, what's incredible is a few things. First, just the stock market overall, and number two, Tesla. So let's talk about both of those, and then we'll get into some of the individual things that are happening. Let's start with Tesla, and then we'll hit stocks overall. So Tesla first. There are a lot of expectations that Elon is unfortunately going to continue to drag out the way that he is selling stocks, potentially through the end of next week, which that's quite a lot of pain, and there's not that much sort of buy the dip buying power that society and people really have with a large appetite for Tesla within these prices. So of course, then prices go down. The end of next week would put us around Black Friday. That's November 26th here. So that's the end of next week. Well, it's crazy to think that's already less than 2 weeks away, and then you get Cyber Monday after that. So aside from those holidays, which doesn't really matter so much in terms of when Elon's selling, it's just the pace at which he's selling is very slow, and it implies a 3-week trajectory. If he sold a third last week, a third this week, and then a third next week, then he'll finally be done with his 10 million, or his 10% sale, unless of course he decides to sell more. On this sort of trajectory, it's entirely possible that Tesla continues to essentially bleed under the pressure and weight of Elon's spread out sales, potentially through the 900 threshold, and unfortunate. It's unfortunate, but this is why it seems like no matter what happens, every time we think a stock is running away and we'll never have an opportunity to buy it again, there'll always be something crazy that gives us another opportunity to buy the stock. In this case, it was obviously Elon selling off. So this is definitely a concern that it's entirely possible that we could see pain at Tesla stock all the way through the end of next week. Now, there is some speculation that potentially Elon Musk will announce a stock split on November 9th. I'm sorry, on December 9th. That's because he tweeted about orbital space flight 12-9, 129. And so some folks are saying, oh, is that going to be the split date that Tesla goes to the moon? I think that might be quite speculative and somewhat unlikely. And then there's some other speculation about how much that there would be a stock split by, since Elon Musk mentioned that 420 has gone up by 69, sort of an inflation reference, that maybe that implies because if a stock split happens on 12-9, it's going to be a 6-to-1 split this time instead of a 5-to-1. All of this is just like pure grasping at straws and speculation. I don't believe any of this. But what I do believe is that Elon is probably not going to be done selling his stocks until the end of next week. And so if there was really a time to buy Tesla, I personally would probably be looking at next week. Now, that also then begs the question, is it time to buy is it time to actually buy Tesla, or is the stock market going to have some form of a correction? Are we going to see some sort of a massive fall? And this is where what's really odd right now is we don't have any massive short-term catalysts for pain in the stock market, with the exception of the potential for Jerome Powell to be replaced as chairperson, of which I have a very, very thorough video coming out on inflation, the new potential replacement nominee for Jerome Powell, and then what some investing consequences could be of that. So stay tuned. I'll break that down. That'll be after this live stream. I'll be posting that, so that'll be a really good one. So you'll see that. But more importantly, beyond that, as a potential negative catalyst that is Jerome Powell getting replaced, the next negative catalyst is potentially a debt ceiling or a budget deficit fight, or potentially both of those, as we go into December and need to kick the can down the road again. Though we know how those end. Those end in a lot of short-term drama. Maybe we get pain for a few days in markets, and then we're back off to the races. And it's entirely possible that this end of the year rally does end up lasting, quite frankly, through January. I mean, we could go into January, we could go into Q1. Potentially, the next real negative catalyst would be maybe some painful earnings for Q1, because then we'll be comparing Q1 earnings of 2022 to Q1 earnings of 2021, and who knows, those might not be as exciting, and we'll be coming out of the crazy Black Friday season, the holiday season, the Christmas season, the Hanukkah season, whatever, right? The gift buying season. So these are, that's, in my opinion, these are like the negative catalysts that we've got looking forward to right now. They're not that huge, but I do think in the future we'll run into much stronger negative catalysts. And quite interestingly, we could be running into this bizarro time frame next year, where if we potentially get inflation that starts inflecting down in the potential summer to end of next year, that's going to coincide with the 2022 elections and potentially the talk about interest rates going up. You're gonna those three catalysts are real catalysts. Like those are serious catalysts. All three of those. Like if we do see a change in inflation, if we talk about interest rates because maybe inflation isn't accelerating down as quickly or not at all, and we have a 2022 election, that's going to be a potential pain point, in my opinion. We're going to be looking at some serious pain between the summer and probably November of 2022. It's just an expectation I have. So that begs the question: can stocks last in this crazy rally? I mean, we're always going to have fluctuations in the market, but can stocks last in this madness of a rally? And the answer is possibly. We could see one of the longest streaks of enthusiasm here for a while, and that's kind of what we've been seeing. Now, I know Tesla obviously has a little bit of pain right now because of the Elon selling, but aside from that, the market's been doing relatively well. Certainly, if we look at individual stocks, I mean, look at the some of the metaverse or technology related stocks like Matterport, up 22% on the day, 22.5%. I crossed 2 mil in Matterport now, just because of this sort of insane run up, which is crazy. Now, interestingly, the indices, while you do have this up on the on some stocks, you do have the indices that are still slightly tenuous, right? So the indices pretty much flat. Look at this, down at 0.07 to the downside, S&P 0.06 to the downside, NASDAQ 0.12 to the downside, Russell's the largest fall here at the 0.43. But you're in this place where prices in many different stocks have gone to record highs and really slight decreases on the indices. Not that big of a deal right now. So the market is almost hunting for negative catalysts right now, and it's somewhat hard to find them. So Neo, sure, it's down 4.5%, still up from that 35 where we had been sitting like almost all summer. It felt like Enphase down 2.56. It's up like 40% from when we were buying this thing at like 145 and 155. And it was funny. Like I bought it at 155 and then it fell to 149. And somebody's like, haha, Enphase fell on you. It went from 155 to 149. It's like, no problem. And then I buy more at 149, right? Now it's at 254 or 245. It's crazy. Some of the pricing is incredible. Now you've also had a little bit of a recovery here in Tesla's price. And it shows you some of the resilience of some of the companies that are just having staying power. And this is where you also have this wedge happening in the market, which is really weird, where certain smaller companies are just doing poorly. People are taking their money out of the non-performers, whether that's Body, Honest, Tattooed Chef, Shift Technologies, obviously in that group. InsurTech, people are taking their money out of the non-performers and they're throwing it into performers. And that's leading these performers to just balloon in price. It's really, really incredible. How we're continuing to see this. Wayfair's kind of been stuck in the mid twos. It always used to go back to 3, but it's kind of been stuck. Ubiquity stuck at 300. It's almost always been stuck at 300. Well, at least for the last like 6 months, I feel like. Overall, I would say prices are relatively elevated compared to the prices and opportunities that we had, with the exception of something like Zillow, which has obviously gotten destroyed on their big faux pas. But this is very company specific, right? Market wide, prices are pretty dang elevated for a lot of different things that we might want to buy. And so, again, it always goes back to, will it last? And I never like to assume that it will. So these are the kinds of times in the market where I'm not buying that much. I'm kind of sitting around, paying off my margin, and I'm planning. I'm planning for, okay, where are my opportunities to buy in? Where do I want to jump in when this market potentially slows down or turns? And now that becomes frustrating because if we don't actually think we're going to have a big negative catalyst until the summer of next year, you don't want to be on the sidelines too much. And so that's where a lot of folks are jumping into something like metkevin.com/basket. This is just an M1 finance pie where you look and it's sort of a pie of 4 different indices, right? And you just sort of have a diversified set of index funds here. And then you purposefully sell these even at a loss to go buy if there's a big dip in the market, because if there's a big dip in the market, some of the high flyers like the Etsy, the Tesla, the Google, whatever, some of these really good performers this year, Enphase, whatever, these guys hopefully sell off a large amount and you break sort of the piggy bank over here and then you go shopping for those. Who knows? That's definitely, I think, what a lot of folks are planning for. But finding that next catalyst is tough. We just know that there will be one at some point, and the biggest real threats I see don't really show up or rear their heads until the summer to fall of next year, which is crazy. There'll be something for sure between now and then, but looking for it is going to be tough. And that's, again, where if I were to simplify kind of the strategy right now, it's fully invested in long positions, but sitting on the side with a new cash in terms of either metkevin.com/basket or just cash. Certainly no debt. You want to be out of debt. You want to be able to use debt when everybody else is panicking. And this is the kind of market where nobody is panicking. It almost feels easy to make money, which is kind of crazy. And it's also scary. I mean, when Rivian, something that is horribly overvalued, is at up 15% on the day because of pure momentum. Something like Matterport. Honestly, I mean, I love Matterport. I actually think Matterport has a lot of value, close to like $22, $24. But when it's up 22% on the day, also on momentum for the potential metaverse, which could be years, and certainly will be years away, it's crazy. We're in a crazy market where everybody's seeking gains, and the gains are getting concentrated into very few names. Well, I mean, I also think, where's Vuzi, by the way, which I think is very interesting. That it is down. Yeah, look at this. Vuzi was up today. Now it's down 3.7%. And see, this is where, I think the easiest way to picture this, and it's something that I think is actually problematic in the market, is back. No pencil. Okay, fine then. I will use my finger. So one of the things that I think is back, maybe, I don't know, call it even 10 years ago, back in like 2011 when I was buying stocks. You had a lot more, in my opinion, diversification, where you had people like, oh, I'm an Apple bull, oh, I'm a Google bull, or whatever, Amazon, Netflix, Facebook, whatever, and many different companies, smaller companies, whatever, right? And people had kind of spread their money into different bets because there was no like social media that concentrated stuff. Now, if this was like 2000, and I'm just making this up as pure speculation here. If this was investing in 2011, right? Let's say that was investing then. And let me copy this. And can I duplicate this? There should be an easy way to duplicate this, but there doesn't appear to be right now. Okay, whatever. If this was, here, I'll just screenshot it really quick. There we go. If this was investing in 2020 or 2011, I feel like investing today, it really looks a whole lot more like this, and then you got a few leftover kind of things. So that way, if I throw in that screenshot I had, you get kind of this difference here. That's interesting. It saves when I copy it. It saves it as a picture. That's convenient. Okay, good. So I kind of feel like this is investing today, and then this is investing like 10 years ago. That is, we've become very concentrated on winners, and those winners keep winning. It's kind of crazy. I don't know how sustainable it is, but I do feel like we've had sort of this concentration of the markets, and I don't know how I feel about it. A lot of things make me nervous, and I think that's mostly because I like to be very defensive. And I know that sounds crazy to some people. They're like, really, Kevin, defensive? And you're like 45% Tesla. But remember, that's also weighted by the fact that if you build in my real estate portfolio, I'm like 20% Tesla. And real estate's like, out of the whole pie portfolio-wise, like 40%. So when you combine stocks and real estate, Tesla's 20%, real estate's 40%. Apple, Amazon, Alphabet, right? These other stocks, these are a good chunk as well, along with obviously the other tech plays that I like. But what I really have, that's a small portion out of the whole portfolio, which the whole portfolio is like, if you include real estate, somewhere around $53 million or something like that. I'm least exposed really to options at like $1.2 million, and crypto at like maybe $2 million. So I don't know, maybe, who knows, maybe that calls for some rebalancing. But when you look at it that way, it doesn't seem that wild anymore. Now it's like, oh, wait, that's actually not as extreme. So I just think it's funny when people are like, oh, Kevin, it's just risky YOLO options trade. It's like, really? It's like a tiny percentage of my portfolio, like 2% of my portfolio, especially if you include real estate. Things go a whole lot more into a different perspective. So, but anyway, uh, yeah, I'm definitely curious about this market. I definitely don't like buying in these sorts of markets. What I'm looking for are opportunities. Like I like selling puts, but I also have to be careful about selling puts because you sell a put and then the CEO comes out and says he wants to sell a bunch of shares. Well, now all of a sudden you I guess you're buying those stocks or those shares. So like let's look at Upstart for example. Upstart's one that honestly I thought was worth sub $100. I was obvious. I mean, I never did a full deep fundamental on it. I the basic fundamentals that I did, I thought it was very expensive, especially once it got over 200. So I've never gone super deep on it. I don't really care to invest in it. Consolidated lending, car loans, refinance. I don't care about that, especially if we do in the future potentially go into higher interest rate environment. I don't know how much I really care about Upstart, but for giggles on trades, let's look at historic volatility. So historic volatility is definitely elevated. We are right now sitting at a historic volatility of about 129. That is a high in the last 100 days. 100-day average about 87. And the last time we had some real volatility was really in August when this really started first pumping. So elevated volatility does make puts interesting on something like Upstart. So I'm just curious to see what puts this week are like. So if I go for something slightly out of the money on a put here, $8 on 23. Well, by 23 I mean 230. It's about 3.4%. Probably not something I'd be jumping up and down about unless I really wanted to own more at these prices, which I don't. Like Redfin is one of those where I do wonder at what point Redfin will stop its decline because it's really gotten burned on Zillow and it just continues to break past any sort of semblance of support. Now, bear in mind when I draw these these yellow or red support lines, they're not very strong support lines. Very strong support lines are when I've drawn like really solid blue support lines. You'll see that, for example, I'm pretty sure if we go to BTC, I've got at least a few. Let's see here. If I go to the day chart on BTC, yeah. See, like my strong support lines are a lot thicker and a different color. These are sort of softer supports. But anyway, let's go back to Redfin over here. Redfin continues to break all of them, and it just sort of begs the question, like, gosh, when is the bleeding going to stop? And the thing is, it doesn't have to. As long and especially with this sort of concentrated market that we're going into, this theory right here, the concentrated, I will call it the concentrated market theory, the CMT. Unsexy stocks don't have to get love. You just not sexy, you don't get it. You just don't. So obviously there's the potentially the temptation of looking at a stock that has higher volatility and has sold off as maybe something that makes sense to sell some puts on. But go to November 19th, Friday, you're actually not getting rewarded that much here. 1.7 divided by 45. Yeah, 3.7% again. It's very similar to Upstart almost. So it's not like you get massively elevated pricing. So, but yeah, otherwise, I mean, look at some of the crazy runs that we've seen, even on like SoFi. Is it $23 for SoFi is incredibly. I've made lots of money trading SoFi, along with a lot of other ones that I had options on, like Palantir. Lemonade has been great, had been great for options. Recently, not so great with the shares that I had. But InsurTech, stay tuned. I probably will still release my InsurTech video today, so stay tuned for that. Then Square, a lot of growth built into Square that might not end up coming to fruition. So a Square is one of those that has a stretchy valuation, and the fact that it's beginning to miss estimates is a bad trend. So we really want to see a rotation there on the trend for Cash App and transactions over at Square. So let's see here. Voyager Dig, $18. It was just over $20. I bought it at $12.30, expecting it to go to $20. I wanted to trade it, but it was too slow. I never traded out of it. Yeah, see, recently, look at that. I ran to 20.97. It's still obviously very elevated from where it has been, but and it's up 4% today, so not bad. Trade Desk is another one that has some pretty incredible valuations. It's expensive. You can compare it to ServiceNow, but it's also a phenomenal company. Founded in Ventura, California, by the way. That's where I'm from. Which is kind of cool. I mentioned to some of the guys yesterday that one of my first clients, potential clients actually, back in like this had to have been like 2011. So not, I shouldn't say one of my first clients, but one of my earlier clients is a real estate agent. I went to drop off papers for her, and she met me up at the reception desk of this company. And I'm like, oh, this is cool. Looks like this just popped up out of the recession, basically, and didn't think much of it. And I thought it was a stock brokerage, and then I left, and now I look back at that memory, and I'm like, wow, that was the founding office of Trade Desk. What did I know? It didn't really matter back then. What mattered was selling houses. And then, of course, I I invested in stocks too, but I certainly didn't look at Trade Desk. I don't even think they were public back then. I'm pretty sure they had private funding up until like 2015, 16. But anyway, so yeah, all right. Well, looking back at some of these stakes, that's a lot of theorizing that I've been doing here. So I suppose we should spend a little bit more time looking at what's actually happening here. Yeah, all right. So let's see. I'll write this down here. Okay. All right. So then we've got. Do we have earnings today? That would be interesting if we actually have any earnings today. Mondays are usually a little boring, as are Fridays, but you get more earnings on a Monday than you do on a Friday, generally. So we get IDX, POW, the ammo company. Let's see here. Desktop Metal. Okay, so a few smaller ones. Playboy. Oh, Go EV reports today. Oh, that'll be interesting. Canoe. Jeez, man. Canoe's been one of those EVs that has been on the toilet. If they can report something, is Lucid today? I don't see Lucid on here. If Canoe can actually give people some optimism, maybe we'll actually see a rotation in that price. Let's see here. Isn't it sub 10 right now? It's just been a disaster. Go EV. There we go. Oh yeah, 841. Jeez, disaster. So Lucid earnings. Are they today? Okay. Lucid will report its Q3 this evening. Oh yeah, on the 15th. Okay. Yeah, that'll be very interesting. Lucid earnings, it's all going to come down to, their margin's going to be terrible, but it's going to come down to hopium on this earnings call in terms of what it's going to do. I think Lucid at up 1.8% has a very good chance of missing substantially, because what they're going to reveal is, I don't think is going to look good unless they come out with hopium. And hopium could be something like, hey, we're coming out announcing that we're on track to deliver 1,000 cars this year. In fact, we're going to be more, than 1,000 this year, which I don't believe. Or some kind of crazy expectations for next year. I don't know. I think it's. I don't want to bet against it, because this market will take any little euphoria thing and blow it up. And keep in mind, you are in an EV cycle right now. Like, EVs are hot right now. It's the only reason Tesla isn't falling more, and people are actually buying the dip off Elon, basically, is because EVs are sexy right now. The fact that Tesla's only down 2% today is, quite frankly, remarkable. And it's been on this incredible downtrend here. But, beyond that, some of the ones that are not hot right now, probably a lot of, honestly, the recovery stocks, which the recovery stocks, I always got worried they overstretched a little bit with some of their valuations. But it does make you wonder if you get full vaccination out for children, which you still don't have. And, you know, you've like the sub-5 children, they still can't get vaccinated. Not making a political argument here that they should or shouldn't, just that they're still not vaccinated. So like, what are your next potential catalysts for recovery? And recovery stocks, you know, here's Cheesecake sitting at 44, down from 65. Carnival Cruise Lines is down from 31 at 22.41, broken that uptrend here. You've got, let's see, I mean, malls are like full dead. I don't understand, honestly, how Simon Property Group is at 171. Or I'm sorry, it's at 165 right now. It ran up to 171. I mean, like, I knew it was going to blow up from 50 and 60 back when we were buying it last year. That was obvious. So was any recovery stock, basically, unless they were going to go bankrupt. But this pricing is insane for malls, which I'm not very enthusiastic about. Like, I want to know how dead Black Friday is going to be this year. You know, I don't know who remembers this, but I remember as a kid, which sounds so weird because I'm 29, like I don't feel that old, but I remember as like a 12, 13, 14-year-old, so 14 years ago, 14, 15 years ago, getting really excited about Black Friday. And you'd go to the mall at like 11:30 p.m. to be there for the midnight launches of the sales at Best Buy and Circuit City, and you know, GameStop. How many midnight launches have I gone to at GameStop? You know, Splinter Cell. Oh, Splinter Cell Chaos Theory is coming out. Taking school off tomorrow, going to the midnight launch. The Burning Crusade, taking school off tomorrow, going to the midnight launch. You know, that, like, those are the cool old days of retail. Man, that's gone. That's over. That is so over. You know, you're gonna be doing that in the metaverse. And oh, Toys R Us. Oh my gosh, I do remember that as well. I remember standing in line for Furbies. That's like the NFT before NFTs. Oh, I got the purple Furby. Never did Walmart midnight. No, never did that one. Circuit City Blast, the good old days. Yeah, it's weird. It's really weird, but I mean, like, these big things don't happen at malls anymore. How could you invest in Simon Property Group at $165 today? It's nuts. How old am I now? 29. That's nuts. Yeah, now it's all about the NFT drops. Ooh. Did I sell Matterport today? No, I didn't. I do think it's euphoric, but you know, I'm basically out of margin. I generally don't sell stocks when I'm out of margin. You know, I did trim a bunch of stocks Friday, but that's because I was getting assigned to $1 million of Tesla. And, you know, some of these were relatively small positions. And InsurTech has gone to crap. So I'm going to make my InsurTech video. And it's going to probably be something like, Kathy Wood was right. I mean, like, you got to be honest with yourself and with others. When somebody else is right and you're wrong, you say it. But anyway, so what else? Okay, wow. So let's see here. Win 4 almost back to $100. It's pretty impressive. Lucid is actually rallying into the close. And in fairness, we are in the EV euphoric cycle. This is a time, in my opinion, not to buy EVs. But I mean, with the exception of maybe like if Tesla continues to have these beautiful juicy dips. I mean, hey, Elon, keep your foot on it. I don't care. Like, please, Elon, bring Tesla back to like $800 so I could sell some other stuff I don't really want, and I could just concentrate more into Tesla. Any hope for InsurTech? I mean, sure, there's always hope, but my hope has been substantially diminished. All right, let's get to the bell and do some earnings. And I'll explain why. There's one line in an earnings report. I finally found it. I finally found you. And it's bad. All right.
The S&P's trying to go positive as we approach the close. A couple of high-profile decliners still. Tesla, Uber, Peloton, Nvidia, and AMD all down, but not down enough to weigh down the major averages. The S&P just turning positive into the close.
Okay, there's the close. Dow down 0.03%, S&P basically flat. NASDAQ 0.04 to the downside. Russell's down 0.45. The Russell small caps getting killed here. Lucid financials. Okay, Lucid has 13,000 reservations. Lucid, quote, remains confident in producing 20,000 units in 2020. Lucid announces their financial results. I'm just going to scroll down to look at the statements here really quickly. I don't really think there are real expectations here. Are we not getting financial statements? Hold on. Okay. I don't know what this is. Come on, airdrop. There we go. Okay, so okay, they remain confident about next year, but what about this year? 4.4, bringing in 4.4 to the balance sheet on the DSPAC, EPA certifications. I don't really care. I care about deliveries for 2021, please. Lucid kicked off the expansion of its manufacturing plant for a production capacity of 90,000 vehicles per year by 2023, expanding the air production, adding production capacity for Project Gravity. Okay, this is just talking about factories. Announced Lucid Care, whatever. Where are the financial statements? Dude, Lucid, give me the financial statements. This is not, I'm getting tricked here. I don't like it. Investors. Corporate profile financials. Come on, man. SEC filings. Nope, no filings yet. Press release. Come on, man. Okay, fine. Still waiting for the financials on Lucid. Okay, fine. We'll come back to Lucid. Let's go look at some of the other ones. So we have Desktop Metals, IDEX. I don't know anything about that darn thing, but I know other people like it, so I'll look at it. Individual company news. Desktop has not reported yet. IDEX has not reported yet. That's okay. Usually they report 5 minutes after. What's another one we want to look at today? Ammo. I imagine that one's somewhat interesting to some people. Beachbody reporting today. Is that true? Ooh. Okay. You must say it in the Schwarzenegger. I'll be back. That's funny. All right. So IDEX DM ammo. Waiting. I don't know. No, Body announced third quarter financial results. Oh, release date. Oh, maybe. Okay. I don't know if that's today. Okay. Let's see here. What else? API actually reports. Remember when API was so cool because of what's that app called that nobody uses anymore? Oh my gosh. I can't even think about it right now. I can't even think of the name right now. You know, the talk app where you join and like Twitter replaced it with Twitter Spaces and Discord does it now with Stages. Whatever. I can't believe I can't think about it, but it's okay. It doesn't matter. Looking at other names that come up here. No. Clubhouse. That's it. Thank you. All right. So, okay. So I'm still not getting actual news here on Lucid, which is very annoying. Like, give me the actual filing. Oh, this was just the press release, which we already saw. Where are the financial statements, people? You must report financial statements when you report. You can't do this. You know what's interesting to me is I don't see a single reference to 2021 in here. In terms of vehicles. Nothing. Dude, nothing about 2021 deliveries. Nothing. Yeah, let's see here, LCID. They're not mentioning 2021 deliveries for some reason. The stock's kind of bouncing all over the place here. All right, so desktop, IDEX, nothing yet. Ammo, nothing yet. Beachbody, nothing yet. API is nothing yet. And Canoe, put volume heavy and directionally bearish. Yeah, I mean, Canoe could go bankrupt here if they don't get their act together. Is Bloomberg talking about Lucid now? All right. Oh, Canoes Results just came in. Hold on a sec. Canoes Results. I also don't know what their expectations were. I mean, it's not like they're really selling anything. Okay. So, okay, Lucid or Canoe. There's no summary on this. Grew workforce by 22%, cash and equivalents of 414 million as of September 30th. Net loss in the quarter of 80 million. They don't have a lot of quarters left. They're going to have to raise money soon within the next year here. And their stock is so down, it's going to hurt. There's nothing on here. Revenue for Canoe, zero. Zero revenue for Canoe. R&D came into at 59 mil. General and admin at 45 mil. Why is your general and admin so high? You guys aren't even selling anything. And to me, it looks like Bloomberg's talking about Biden and signing the infrastructure bill into law. So
thank you. To state the obvious,
boring.
none of this would have happened without all of you. I really mean it. And also to the government.
Nah, that's boring. Okay, going back to earnings here. So, okay, Beachbody just came in with a loss per share of 13 cents, revenue of 208 mil, and loss of 33.9. Expectations for Beachbody were a loss of 47 mil. So they actually had less of a loss than expected. This is a beat. They beat at weight, but revenue came in lower. Hold on. Yeah, revenue missed a lot. Oh, wait. They were expecting 247, and they came in at 208. That's 208 divided by 247. That is a 84%. That's a 15.8% miss on revenue, but they beat on the bottom line. So the revenue number, I don't think that's bad. That's bad for body. People aren't going to like it. Yeah, that can't be good. Stock doesn't like that. Stock don't like that. Okay, ammo. Come on, man. Give me some summaries here. They're literally all of them are not giving me a summary. It's quite frustrating. Because it takes me a lot longer to do it normally. Desktop metal falls 11%. No summary either. Okay. Well, I can look at their expectations here. Revenue growth. Revenue came in at 25.4 mil. What was their net? I'll just look at the financial statement. So they came in at 25.4 net and a loss per share of 26 cents, net loss of 66 mil. So the numbers to remember, 25.4, 66.8, and 26. And the estimates for Desktop Metal were a loss of 23. Oh, that's a huge miss. And revenue of 28, slight miss. So that's a huge miss on the bottom line, though. Isn't it 23? Hold on. 23. Wait a sec. It's hard to remember this stuff. The loss came in at 26 cents, and the consensus was 9 cents. Oh. Yeah, consensus loss per share of 9 cents came in at over 20 cents. Let me go back to this. Revenue of 28.6. No, but the revenue wasn't that big of a miss because their revenue expectation or their revenue came in at 25.4. It was the loss per share. It's the bottom line that missed so terribly. The net income. Yeah, that's what killed them here. Ouch. It's a big drop there on desktop. DM. No, it's not doing so bad. It's down about 4.2. What is this? Almost 4%. And then where's body? Body is down 13%. Wow. Is that true? I mean, the revenue was a 15% miss. Yeah, it is. It's down 14%, folks. Holy moly. It just shows you, just because they're cheap doesn't mean they're a good deal. It's not good. No. All right. So, Beachbody, Seeking Alpha. No, boring. All right. We don't yet have API, by the way. Canoe Results, I'm still trying to take apart here. They had no revenue. I mean, what's there to show? They're burning more cash and they have no revenue. So they're down 2%. I mean, that's kind of expected, honestly. And then what I really want to know is why Lucid is not disclosing the 2021 yet. It's up all of a sudden 5%. So I don't know what happened here. No other news other than it just being on track for 2022 production. Well, it's obviously because they're going to miss 2021, but the market doesn't seem to care as long as they're on track for 2022. Apparently is what the market cares about. This is why you can't bet against EV stocks in an EV super cycle. So they have operational capacity for 34,000 vehicles a year. They want to get to production to 90,000 a year by 2023. Yeah. The good news is they have money. You know, that's the thing. They have the money. Oh, wow. This was kind of buried in here. Customer reservations were 13,000 in Q3, but have since grown to 17,000 plus. That's actually pretty good. That's a good growth in reservations. It's not just people who are excited about the IPO. Wow. Hmm. Let's see here. Okay. All right. So what else? Let's see here. Oh, wow. Why did Marathon Digital tank 27% today? Holy moly. Let's look at this while we wait for some of these other earnings to pop up. Marathon Digital. Nickel reported outstanding reservation. Oh, I'll take a look at that. So Marathon receives subpoena tied to hardened data center. Oh, that's not good. SEC inquiry. Wow. Oh, and an offering. Oh, double bad news today. $500 million offering and an SEC. Ugh. Both. That's crazy. Yeah, but that's what the stock market's for. All right, what's going on with Nikola? Oh my gosh. I can't believe we still utter those words. I think Trevor Milton is still exposed to a criminal investigation in New York, I believe. Oh, look at this. Just in about 30 minutes ago, judge rejects Nikola founder's bid to dismiss fraud case. Ooh. All right. All right. After hours here. Owlet is up 5%. Oh, Owlet's almost back to $5. How cool is that? Oh, but it fell 7% on the day? Well, that's interesting. Playboy. Playboy must have reported. Let's look at Playboy. I like how for Playboy, like the ticker is PLBY, and then here it just says PLBY Group, as opposed to writing it out. All right, Playboy came in with 58.4 mil in rev and 18-cent loss per share. The expectation was for a loss of 3 cents. Wow, that's a lot worse of a loss than expected. And revenue was expected to come in at 56, and it came in at 58. So the top line came in great. But there's also talk about how the estimate might not compare. I'm not exactly sure why. But I mean, that's a beat on the top line there on Playboy. That's cool. It's up 7% now. Yeah, it looks like there's definitely some something going on here. Let's see. 67% increase in revenue. We've made meaningful progress. Expanding U.S. direct-to-consumer commerce business. Optimizing our license partnerships. No summaries here, just a big statement. Well, good for them. Direct-to-consumer revenue grew 139%. year over year to $36 million. Wow. And licensing revenue is up 14%. That's incredible. Let's see here. Lucid Air was named Motor Trend Car of the Year. You know, I saw that and I kind of glazed past that. Is that maybe why it's moving? I mean, I don't really care about the magazines, but maybe that's a bigger deal than I think it is. Oh, Lucid Group confirms win of the 2022 Motor Trend Car of the Year. Oh, well, good for them. Maybe it is moving on that. Oh, that's incredible. I think it's a great car. That's why I pre-ordered one, but I don't know if I actually need a new car. And I just don't think they have a shot really in the self-driving department. They're going to end up partnering with somebody. I mean, they've dropped hints before about maybe like an Apple partnership and things like that. Okay, so let's see here. I sent in my request, but I haven't heard back. All right. Ammo. I wonder how ammo's doing. There's also no ammo reports. Let's see here. Ammo came in at 61 mil in revs and adjusted EPS of 17 cents. Profitable. So 61 mil and 17 cents. Let's compare those two things. 61 mil, 17 cents. 61 mil, 17 cents. Expectation was 10 cents, so that's a beat. Revenue expectation was 55, so that's a double beat. That's good. Also, POW ammo should be doing well. POW. Not really. It's up 2%. I mean, that seems like a good beat. Lucid 5% on that Motor Trend thingy-majiggy. And Matterport's still going. 1.4%. Let me see if there was any Matterport news today, because I'm pretty sure it was just momentum. By Philip Morris? No. Okay. Yeah, everybody's referring to Matterport as a metaverse play. I mean, that was instantly what I did when I when the metaverse talk came out. I'm like, yes, Matterport. But I didn't think everybody else would all of a sudden think the same thing. I mean, it makes sense, I suppose. Like, I certainly wasn't going to buy Facebook. I never liked Facebook. Or I guess I should say Meta. All right. So Lucid's almost up 7% in the after hours. Gosh, that's incredible. Beachbody down 15%. Desktop Metals down 7%. Arcimoto's down 4.5%. Did they report? Yeah, it's possible. There's I think Matterport has confirmed Meta deal or something. That was a long time ago that they were doing something for their charity or some kind of scanning. I didn't know that there was anything recent. I mean, maybe you are referring to something recent and I haven't heard about it. Look at this headline from Bloomberg News. Quote, tattooed chef Arcimoto among most shorted stocks ahead of earnings. Oh. Tattooed chef sitting at 37.1% short. Arcimoto at 34.7% short. Oh. Wow. Wow. All right. I wonder, let's look at what Tattooed Chef's expectations are. So the thing's at 1639. It's been bleeding. It's done nothing pretty much for a year, which is kind of crazy to think about. November 16th, the closest I can get, it closed for 1686. Now it closed at 1636. Ouch. They really need a breakout here. Hey, maybe this will be their breakout quarter. I mean, looking at Beyond Meat, I don't think so. But then again, all you need is a motor trend certification and your bad earnings go up. Nobody bats an eye at the fact that you didn't report anything for 2021. And yay. So expecting revenue of 64 mil for Tattooed Chef. Next announcement is tomorrow. 64 mil in revenue is the expectation. Let me see if I can get quarterlies here. So if I go to quarterlies and I go to the last one, they were at 50.7. So the market is expecting them to grow about 15%. 64 divided by 15.7, 50.7. That's, no, I'm sorry. What? Is it really that much? It must be 26%. 10%? Oh, yeah. Yeah, I did that math wrong. Yeah, I'm thinking 15 million, not 15%. 26.2%. Quarter over quarter revenue growth of 26%. That'd be like an annualized rate over 100%. Maybe. Good luck. That seems like a high bar. Loss per share is 6 cents. We'll see. Is the expectation, which they were at 6 cents last time. And then they are expecting some margin improvement, which that'll be good. If they can pull off the margin improvement and the revenue beat, that'd be good. Especially if their revenue came in way higher. You know, who knows? Maybe their revenue will come in substantially higher. Then it'll move substantially. That'll be awesome. Tattooed Chef, okay. IDEX, and is it really that we have to wait for IDEX? 9 minutes? Let me see here. IDEX. Yeah, I don't know why they're taking so long. Okay, what else here? Ooh, Beachbody selling off more, 16.8%. 7% on desktop. Archimoto 4.5. Norwegian. Did Norwegian come out with bad news? NCLH. I could never remember that ticker. It is just the weirdest ticker. It should be like NorC or something. Norwegian to offer exchangeable notes, proposing to sell 800 million of exchangeable senior notes. Oh, got it. Okay. And IDEX reports next week now. Ooh, it's not good when they do that, especially last minute like this. Oh, well. Look at Bitcoin. It's selling off a little bit. I had a dream that it crossed 70,000, and then I woke up and realized it was just a dream. But folks, look at it continuously bounce off this little like crappy line that I've got drawn here. It seems to regularly bounce off the 63.7 number. It's kind of interesting. At least here recently, that seems to be a threshold line. I mean, I know it broke past here, but that's why it's not a more solid line. Romeo Power. Romeo Power. What the heck is that? Romeo Power reports EPS beats by 15 cents. The consensus was negative 28. They came in at 13 cents. Revenue came in at 5.76 million. Oh, 5.76 million. That is a tiny company. Oh my goodness. They're teeny tiny. Little baby company. They are an energy technology company delivering electrification solutions for commercial applications, headquartered in LA. Oh. Romeo Power. What is this thing? RMO. RMO. Oh, wow. It is definitely bled out. It's up 18%, though, in the after hours. I don't know that I would have wanted to be a hodler through all this. It's a $593 million market cap. How's it a $593 million market cap with $5 million of quarterly revenue? Oh my gosh, it's 100x its quarterly revenue. That's insane. Gee, this stock market just doesn't make sense. It just doesn't make sense these days. Ay, ay, ay. It's like what Warren Buffett says. The stock market in the short term is a voting machine and in the long term is a weighing machine. That's what you're seeing here. It's going to end up being true for crypto as well. We'll see which ones end up getting weighed out and lasting. There's so many of them. It's incredible. Beachbody now down a full 19%. DM 6.48%. And Owlet's got that 5%. Did Owlet report news? Let me see here quickly. And Biden just signed the infrastructure bill. Let's see. Owlet. Individual news. Owlet. No. No news. Alrighty. There you have it. Well, thank you folks for being here. I will see you all in the next one. Thanks again, folks. Bye.